To keep you updated on the capital and financial markets, here is a recap of what happened.
Malaysia ranks among the top 3 global markets for artificial intelligence adoption in finance, but over half of the country's high-net-worth investors still prefer a hybrid approach that integrates AI with human expertise when making financial decisions, according to HSBC. However, high adoption has not replaced the need for human guidance. Over half of local respondents prefer a human-AI synergy when managing their money. Technology gives us speed, but human connection builds trust. The future of banking lies in a seamless partnership between AI-driven insights and human expertise, HSBC Malaysia Country Head of International Wealth and Premier Banking Linda Yip said in a statement. Despite a meaningful increase in assets under management this year, the private pension administrator points out that more than half of its contributing members did not make a private retirement scheme contribution in a given year between 2020 and 2025. The average dormancy rate over the 6-year period stood at 59.4%. This also means that, in a given year, close to 3 in 5 PPA contributing members did not utilize the personal income tax relief of up to RM3,000 available for PIS contributions made through the PPA. The global asset management industry is becoming increasingly divided between large diversified platforms and specialist boutiques as fee pressure, rising costs, and the expansion of private markets make it harder for mid-sized firms to compete. Chris Kroger and Nick Decker, senior partners at Alpha FMC, a London-headquartered financial services consultancy, discussed the key issues faced by asset managers in a changing global environment with Asia Asset Management. According to Kroger, asset managers face simultaneous pressure from several directions. He says institutional fees have been declining by around 3% annually and passive strategies now account for about 39% of investments among the world's largest managers. At the same time, industry costs have risen faster than revenues since 2010, reflecting investments in technology, data, regulatory reporting and operating infrastructure. A useful way to describe the pressure is this: managers are having to fund more capability from a lower fee revenue base, says Kroger, head of UK, Middle East and North Africa, and Asia-Pacific Asset and Wealth Management. That is a difficult equation for firms without scale, specialism, or strong distribution. India's markets regulator proposed revamping its framework for accredited investors to allow more overseas investors access to higher-risk investment products and strategies. Accredited investors are individuals or companies that are financially sophisticated based primarily on their annual income or net worth. In the AI boom, the providers of infrastructure for the technology may capture some of the most durable returns for investors. As AI capabilities improve at a lightning pace, constraints such as electricity supply are emerging as an important issue. Companies that can alleviate these will be in strong demand. This is a prospect that is already being recognized by investors, judging by the performance of a basket of stocks that span sectors across the AI infrastructure value chain, from utilities to information technology to hyperscalers.
FIMM is pleased to announce the release of its latest annual report, now available on its official website. Link in the description. Read the latest issue of the e-Zine available at FIMM's official website to stay updated about what's going on in the industry.
This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.